Yo, what's up? It is AM Trades. Hope y'all are doing well today. And today's video, we are just going to be going over the market recap for the 16th of April, 2024. So I want to firstly say that it is only 12:52 my time, so it's almost 3 o'clock New York time, which means that market hasn't yet closed. But earlier today, when we get to news, Powell was speaking. So when Powell is speaking, I usually don't trade the day at all. I'm leaning towards starting to trade the AM session before because over the last couple weeks when he has spoken, the AM session price action has actually been pretty good. But we'll discuss all that in a minute. So let's get right here onto the news. So if we go to this week, we can see yesterday we had retail sales, manufacturing, and month over month and core. So, right, those are the results. Yesterday we took a win again. Trade recap was uploaded yesterday. And then if we look here, Tuesday, April 16th, this is in New York time, of course, we had a lot of kind of orange folder news, so not as important. But the thing is that we had Powell speaking at 1:15 New York time, which means that the chairman of the Federal Reserve, so he's the one to announce stuff like rate cuts, rate hikes, what is going on with core price data, kind of everything that's kind of the fundamental side of the markets. So that was today, and I believe that the Federal Reserve is still speaking. Let me fix this. Is still speaking at the moment, not Powell, but other members, and doing their presentations. But if we move here, so we'll do a full markup today. So start on the 1 hour, and then we have the S&P here as well. If we remove drawings, so we can mark out our market open here at 9:30. There we go. Let's go to the 1 hour. And then if we do the same here, 9:30 open. What was yesterday? Oh, there we go. All right. So we have this 9:30 open. Go on the hourly. Let's see what sentiment is. We are obviously in a downtrend, and the same on the S&P as they are correlated pairs. So downtrend. And then if we see before market open today, right, there was no clear SMT divergence. So they were still pretty correlated, right, which is fine, except for this beginning of the fair value gap. It didn't get tapped into until after market open. And here we can see that we did get a tap in. Oh, no, we didn't either. Yeah, so no divergence here. So if we move down to the 15-minute, what we can see is, okay, we have relative equal lows here. They were purged on the NASDAQ, and they were not. So this is a bullish S&P divergence in pre-market between these lows right here and here. All right. And so that indicated that we wanted to go higher. Of course, I don't trade pre-market, so I'm probably sleeping during this. Yeah, it's 1 o'clock in the morning. So that's formed. But this goes into me forming my bias for after market open and when the day actually starts. So if we have a look here again, go down onto the 5-minute, we can see that around market open, there was this fair value gap, which got filled, and then this low was swept. However, this low was not swept on the NASDAQ, indicating, again, bullish S&T. So seeing this on the 5-minute would have likely caused me to want buys, and especially out of this 15-minute fair value gap, right? And then obviously I wait for the 10-minute candle, or like the 950 to 1010 macro. So if we mark that out as well, we can see all the way up to here. That's kind of my box of where I want to see an entry macro. So once we're here, we don't need the S&P anymore because we already have our divergence formed and already have our bias. So we are looking for longs. And then we have this 15-minute fair value gap here. Let me show you. Oops. if we have a look, this 15-minute fair value gap, and this is the fair value gap formed off of the rally from this 15-minute SMT, which makes it even more higher probability. So we see a tap into that at market open, the manipulation leg down. We have all of these resting highs here, okay? All these resting highs. We also have highs here that need to be swept. And so those are going to be our take profit targets. And then now we're on the 1 minute looking for an entry within our macro. So we look here, we tap into the 15-minute fair value gap, see a rejection. I would have had limits here on the first 1 minute fair value gap with stops below here. Of course, those never got hit, so we ignore that. And then we are looking for a fair value gap entry on the 1 minute here. So let's see. There's a fair value gap here, would have had limits. I likely would have had an entry here if I were to trade today. And then stops would have probably been below this. Hold on, let me see the 3 minute. Yeah, stops would have likely been below there. And then if we see our take profit levels, like I said before, we have these relative equal highs. So that would have been TP1. And then if we wait for price to load, and then TP2 would have likely been this high, which never ended up getting hit, as we can see. So it probably would have been take 50% off at this level or set stops to break even, and then I would have gotten stopped out at break even. And that would likely have been the trade for today, if I'm being realistic. And if we kind of see the perfect setup, would probably have been to keep limits here at this 1 minute fair value gap. Actually, I think it was a 5 minute fair value gap. No, likely 3 minute then. Not even. Yeah, so this 1 minute fair value gap, which would have been kind of a lower conviction trade, which I don't like taking. I like taking very good setups, especially while I'm in drawdown and I don't have a buffer on my account. All right, so here, stops below this low, as this is where the 15-minute fair value gap kind of mitigation happened. And then we reach up all the way to the previous take profit level, which was right here. And let's see if that got hit. So if we drag this out, it did not get hit, kind of a couple pips below it. But we wouldn't have had our first take profit at 3.06. And anyway, when it broke this high right here, I would have set stops to break even. So yeah, that's pretty much. And then as you can see here, right when Powell started speaking, we had the manipulation lag. And then this was during a presentation by Simon Smith, I believe. I was listening in today. And he was discussing bell curve of inflation compared to unemployment and why that model doesn't work as well anymore. And that's kind of this volatility here. But yeah, as you can see, there's not much movement on days, especially AM sessions, before we have Powell speaking. However, today there were still two quite clean setups, and two setups that would have at least been break even and or take profit at certain levels. So yeah, I think that's everything for today. If we look over tomorrow, we have Mester speaking, which means at 5:30 as well, which means that tomorrow's going to be a good day because there's not as much high impact news, and it's also not a Monday, which means that we will still have volume and movement in the markets. And then Thursday, unemployment claims, manufacturing index, and existing home sales. So Thursday and Friday, we will definitely be on charts. Yeah, with that being said, I hope you guys found value. Hope you guys found this entertaining at least a little bit. And I will see you guys tomorrow for the trade recap and market recap. See ya.